Hey everyone, this is going to be a quick video on how to determine a valid market structure shift. So I'm going to be speaking specifically about the 2022 ICT mentorship model, and we can see from episode 6 that this slide describes exactly what a market structure shift is. And it's when you see a price deliver a rally above an old high, then shift quickly lower. And the term quick is the key word here. You don't want to see a very slight lower low with just a couple of wicks. You want to see a really energetic move with some displacement lower. And obviously the same is true for a bullish market structure shift, where you would want to see energetic displacement above an old high. So we're going to look at some examples here. These are all charts from the NASDAQ futures. And you can see right before the market open, price takes out this sell side liquidity right here, then trades through this old high very energetically, leaving behind a couple of fair value gaps. And now, according to the slide we saw previously, we want to see a fair value gap form in between this displacement high and this displacement low that marked the market structure shift. So we want to see a fair value gap in between this range. We have one right here and one right here as well. So this could be taken long if you have some higher time frame objectives in mind, or you could wait until this fair value gap is traded into to target these highs. And if you watch my video on optimal trade entries, you might recognize this as an OTE. And in this case, price did take the 70.5 retracement level exactly before taking off and seeing all these higher time frame targets, including the measured move of this entire first range. So we have another example here where price takes out sell side, creates a lower low, no displacement yet, then trades lower and energetically punctures through this old high, indicating a market structure shift that also leaves behind a couple fair value gaps. So there's one right here, but it's not in this displacement range, so we don't look to enter right here. The only other choice is the fair value gap that's sitting right here, with a 1 minute bullish order block right underneath that. And you can see this fair value gap is within the displacement high and the displacement low, so we would want to enter somewhere in this area, targeting buy side liquidity. So we have another example here where price sells off pretty much immediately from the open, trades back up, chops around for a little bit, creates this high, and after taking out this high, price trades lower very rapidly, taking out all of these lows and all this liquidity right here. And now if you mark this as your displacement low and market structure shift, and this is your displacement high, then you want to see a fair value gap somewhere in this range. Now you do have a couple of fair value gaps in this range that price never trades back up to. That's completely fine. You would want to look for another high probability entry. So being that we traded pretty significantly lower through this old low right here, it might not be too realistic for price to come all the way back up here, especially after the morning sell-off. So what you can do is look for fair value gaps that are still within this range, which there is one right here and a very small one up in this level. And then you also have this order block, which are these two consecutive up-close candles before the down move. So price trades into the fair value gap. This would be the ideal short. Trades a little bit higher into the order block, but is rejected pretty immediately, and then hits these local lows right here and these lows from earlier in the day. And really quickly, I just want to go over some false market structure shifts that could have led to bad trades. So we have this morning sell-off, price trades back up a bit, and now you might be looking for a second leg lower. You would probably note these relative equal lows right here. Price trades under it just barely and then trades away from it very quick. Then you have it come down again, trades under this low, leaves behind a fair value gap this time, but then trades right into it immediately. And the same thing happens once more, price trades right under that low and bounces pretty quick. So in this entire sequence, there really weren't any energetic moves to indicate a significant displacement. What you really want to see is a move like this, where price trades through some old lows extremely rapidly, leaving behind some fair value gaps. And this is where higher time frame bias also comes into play, because being that we had this huge sell-off in the morning and we took out these local highs, once you see this price leg down, you could consider a market structure shift to be at this low or this low or this low. It's really just once you see this energy coming in, that's when you start to consider that the trend could be changing. And so in this case, we didn't trade back up into this area, we just kept heading lower, but we did ultimately come back for a nice setup in a fair value gap and bearish order block. So one last example right here, you can see we had another sell-off in the morning session, created some internal range liquidity with these local highs and relative equal highs right here. And then at 1 o'clock, again, time and price, we trade through this liquidity and then immediately reverse. Now at this point, we do have a fair value gap right here, but we haven't taken out an old low to indicate a market structure shift. Price trades back up, now comes through this low, closes under it, leaves behind a fair value gap that does not get traded through. And now it just barely takes out this old low right here, if you can see that wick, trades away from it, and then very rapidly comes back under and closes below. So now this is where I'm marking my displacement low right here for a market structure shift. And coincidentally, you have a fair value gap right here, and these two up-close candles would mark a bearish order block. So once price trades back up into there, that's the short signal. Now price wastes no time hitting this first target, and also the liquidity built up by this trend line and these targets down here. So again, if we were to look at what's not considered a market structure shift, we could look at this range right here as a good example, where you have a local high put in, it's barely taken out, just a wick through and then traded lower. Although there is a fair value gap in this space, there is no displacement through this old high. So this is not a market structure shift. And just a few minutes later, the same thing happens where price trades through this old high right here, just wicks through it, and then comes all the way back down, this time no fair value gap. So there is no energy coming in to indicate that this is a market structure shift. And now once price comes down off of this high, you see that it trades through very quickly over this old high, leaving behind a couple of fair value gaps. You could look to enter right here, although it's not really within the range of this displacement high and this displacement low. So you might want to leave that one alone. And furthermore, it didn't really take any significant liquidity by making this low, so you don't really have much reason to look for a strong reversal back into opposing liquidity. But now, again, once we take out liquidity on the buy side, we see a couple instances of price dropping pretty rapidly, leaving behind some fair value gaps and trading through old lows and closing below them. And so from this whole chart, this is one of the only valid market structure shifts in my opinion. And even if you were looking at this range right here and seeing, how could I have caught this entire move down, you would just want to ask yourself, where is price trading energetically through some old lows or old highs, and were there any retracements into fair value gaps? So you have this low right here, price trades through it, just barely closes below it, but doesn't really indicate any energetic move. Trades away from it immediately, and now again trades through these old lows right here, but just wicks through it, trades away from it immediately, so you're not interested in a bearish market structure shift just yet. And now here, price finally trades under, closes below, sees some action to the downside. This is where I would confirm a market structure shift below these lows, but it's not very likely that price is coming back into this fair value gap before heading lower. So I hope this was helpful. Again, I'm just essentially repackaging what was taught in episode 6 of the ICT mentorship. I know I was certainly confused to begin with when trying to figure out if a market structure shift was valid or not. I got caught in a bunch of false moves, but really the key here to keep you out of bad trades is really looking for that displacement. One of the things you have to be careful about is if we're in a day where we have reason to be bullish and we're creating these higher highs and higher lows, and suddenly we just barely wick through an old low but don't break it that significantly, that could simply just be inducement for smart money to accumulate their position. So really making sure to emphasize displacement as a key criteria to determine a market structure shift should keep you out of a lot of bad trades. But again, I hope this was helpful. If you have any questions, please feel free to leave a comment or reach out to me on Twitter. We could have a conversation there if you want to talk about some charts or anything. But yeah, that's all I had, and I'll see you in the next one.